Hey guys, welcome back to another video. I could have waited. And if I did, I would have noticed. That I could have taken a trade later in the day and be profitable. These are my mistakes. That's my psychology. When you begin trading a lot, you tend to form these patterns, and you notice these patterns in your psychology, in your trading. You notice these patterns being created and being diluted. And the pattern I'm going to share with you is that I find it better to trade after 10 a.m. and to just wait for price to show a setup after 10 a.m. Usually anything between 9:30 and 10, those 30 minutes are the most volatile and disrespected zones and areas of liquidity that you could think of. And if I just hop on the 30-minute just right here for 1 second, you'll see that this 9:30 candle goes everywhere, and 9:30 and 10 at like the same time. But this today was a little special because we had unemployment claims at like 8:30 right here, so we were bullish. But I've noticed this over and over. Every time I try to take a trade before, like I swear to God, I took a trade today at, I kid you not, 9:56 probably, 9:56, and I got stopped out. And then 10 a.m. and then I could have taken another trade, but I lost all my money that, my option power wasn't there anymore. So I couldn't take the trade. And I'll show you the trade that I would have taken. And I can also show you the AMD setup that I've been using. And today was like the perfect, like the most perfect like thing to do. And the lesson that I want you to go away with today is that time is key. Time is key. Right? Me as a beginner trader, I'm always excited to get in the market, to make money, to become rich, right? But maybe that's what's making me lose, and that's 100% what's making me lose. I want to get in the market, but what if it's not the right time to get in the market? Ask yourself that. What if it's not the right time to get in the market? If you want to buy and we're selling, why do you want to get in the market? Because I want to make money, but you're not. You're going to lose money. We're in a selling program and you want to buy calls. That's a problem. Mentally. That's a mental fucking problem, you fucking idiot. Time is money, and you should not be in the market at the wrong time. Talking about time, right? Let's drop down to the 5-minute because I think this is my favorite time frame. This is where I trade. Lots of colors, lots of things going on. I know. Let me make it easier for you. Let's just do this. Can we do this? Boom. Peaceful. We can all see the chart here, right? With my own eyes, let's do, I can't really draw or else it puts everything back, but let's do this. When was like 8:30? Let's do 8:30. Okay, so right around like here, for example. So this is the chart I'm seeing before market opens or anything like that, right? And we have 8:40. Okay, so this is like before. So you have this is like the London session, right? Could probably draw. Okay, so I'll just do this. We had this daily market structure shift. Wasn't really super intrigued into this because this was not big for me because there was one level that I wanted to go down into and probably reach was this hourly fair value gap, and so that was a PD array for me to bounce off of, but I had low expectations. I'm not gonna lie, very low expectations. CPI, PPI, and today unemployment claims came out. That's 3 news days in a row. Price has been through hell. I mean, look at this, just price. CPI just came right through, created lots of gaps. Like we can even delete this one because that one's gonna get filled later, but it's created so many gaps that price needs to come back into fill back into stuff like that. So there's just so much out there that you can count anything and everything. Like it's incredible. So the nearest one that was near us at that time was this 1 hour fair value gap here that I marked. Were we going to reach that? I don't know. And then there was this like order block here that I couldn't fully mark out because the candle didn't close there, but I marked the wicks, and you can see it had a nice pretty reaction on that price action today. So I marked these Asian lows that were down here. London lows got swept up here, and so I marked all this engineer liquidity down here, equal lows, and so that was our target there. But this happened at like 6 a.m. We just took that out. So we could take that out. Okay. And notice how I also drew my quarterly theory. Currently this was an AMD setup, AMDX, my bad. So accumulation, A is accumulation, M is manipulation, and then D is distribution, and then X is reversal or continuation. And AMD setups are the best because AMD makes sense, right? You have accumulation, price accumulates, and then you have manipulation. Those manipulation is either above the accumulation highs or lows or both, which in today's example was both. And in today's example, if you waited, right, if time is money and you have to get in the market at the right time, time would have saved your ass. Unlike me, time would have saved your ass here. And if you waited, you could have gone in and had a beautiful trade because all this engineer liquidity was already built for you and you didn't have to wait until everything was created. Everything was already there. So what am I talking about? What is this trade that I'm talking about? What is the potential trade that I could have taken? And what is the trade I definitely could have taken? So the first thing you'll notice is we always trade in the New York session, right? You look at the New York session, or you look at the London Open and the London session. As you can see, we did not move at all in the London session. This was all accumulation to me. As you can see, this is just like, this is all accumulation. And then we start the New York session, right? Kind of drop down. We trade below this accumulation, kind of like chop around here. And we have these Asian lows that aren't being swept pre-market. So I expect that to be swept sometime. Like, we want to get there. Like, we're so close to get there. We want to get there. That could be the run on liquidity, or the run on liquidity could be these equal highs here. But notice we do have this daily fair value gap up here that was created off CPI. Yeah. Or no, this was a order block, I think. Or I can't remember what it was. It was something, but it's definitely playing a, Jesus Christ. It's definitely playing a big play in this price, because when you see 830 is right around here, 830 we get that bullish news, and it trades all the way up to almost consequent encroachment, but it gets in this gap. It gets in this order block here. And the reaction it has is a sudden sell. Now, do we sell all the way to Asian lows? No, because this is 8:25. Like, we're about to open in 5 minutes. In 5 minutes, we open. In 5 minutes, we're bullish, bearish, whatever. So now I expect, in 5 minutes, we're going to just start selling. And so my original plan, I swear to God, I saw this in studio art, was, there's going to be a classic go up, hit some kind of fair value gap, and then come down right here, like a silver bullet almost, but like at the 930. So bullish price opening, hit the fair value gap, and then we just draw all the way down to Asian lows. And that would have been like a nice little trade. But notice how small that picture is. Like, notice how small of a trade that would have been compared to what we could have taken here. This whole move up, we could have definitely taken that. So what happened? So open at 930, very bullish price action. And then we do kind of get that reaction that I was hoping for, was that, down move. Unfortunately, that's where I took a trade right away. And this is 935, man. Like, what did I say? From 930 to 10 is the most volatile. And this definitely proved it, because this took me out and then it went up and it didn't even go short anymore. And I thought we were perfect. I thought this was going to be like the perfect setup. I've seen this so many times. So I was like, all right, whatever. I lost money. It's whatever. And then I drew this 10 a.m. mark, and I swear to God, I literally entered off here. Yeah, 955. I remember this. No, I entered up. What did I enter? I entered short, like somewhere up here. right by these highs. I entered short up there, and so it just kind of took me out. But anyways, I drew, let's delete this. 930 up, down, gets bought up, bullish price action, wants to run these highs, and then he wants to take out that consequent encroachment, which it does, and then he goes even higher to sweep this fair value gap or this order block. And then I was also in class and I was waiting for a reaction. I saw the reaction, strong push down, and then I saw the strong push up, and I was like, okay, well, the only thing I want to see is we're allowing this to retest this 100%, because this might be the last leg of like, okay, I want to come back down all the way. And so it did. So it went all the way up, very bullish. You're like, all right, well, I should probably get in calls now because, that's what I'm supposed to do. But if you look, if I got in the market at 10, right? If I started trading at 10, not meaning I'm in a position at 10, that just means I start actively looking for setups at 10. I would have seen this sweep of liquidity or whatever. I would have seen this order block get hit. I would have seen this, and I would have seen multiple things happen again. Boom, bullish price action. I'm like, okay, well, I'm going to wait for this to sell back down. It sells back down. And then guess what? I'm going to say, well, with this displacement, I want to see a market structure shift. So where do we see this, right? Obviously on the 5-minute, there isn't a market structure shift. The only thing I see here is this. This is a tiny, like, hopefully 3-minute shows it, but this right here, it doesn't really show it, but this right here is like a nice little breaker structure right here, this low, and then we break this low, we close under this low for 2 more candles. So I was like, there's definitely some kind of displacement, which there was here in this huge displacement candle that started selling off. So I looked for that. So in the 3-minute, there was nothing. So I was like, all right, well, the last time frame there is a 1-minute, and I hate taking entries off the 1-minute because it's just such a small time frame. As you can see, we get bought up, and then one final good down, bearish candle. I was like, okay, this is our displacement, original displacement. This is where we want to enter off. And so this is where I set my, actually it's consequent encroachment. You always take off the consequent encroachment. And boom, and you set your stop above, like right above the high, because if price wants to take out this high again, right off, like if this candle is going down, that's the risk you're taking, and you don't want price to come even higher. And so this is the trade you could have taken, right, off the market structure shift, breaker structure, sweep of a high time frame liquidity, and targeting what? And I knew what we were going to target. We were going to take out these Asian lows, because guess what? Pre-market, let's go back to the 5-minute. Guess what happened pre-market? We got down a little bit, and now the only chance we have, again, is this accumulation sweep. Where is this liquidity? We have engineered liquidity that is already set up for us, so we're targeting this. And if we're so close to this, why not just take out the Asian lows right there? And so this is what I realized a little after, is we also had like an order block that played in price, but I didn't have this up at the time, so we're going to delete this. And so here you're looking at the chart, and this is pure manipulation, because this, when you exit out a little bit, right, you can see the quarterly theory. You have accumulation, manipulation, distribution, X. So accumulation is here, and the manipulation, you want to see something get taken out first. So obviously, what do we see get taken out first? We see the lows get taken out first. That's what gets taken out. So now my bias would be, if hypothetically, right, if we say don't extend right, if we say this right here is the accumulation, I'll change this to gray, and this right here is the manipulation, which it is, because it took out the lows of the accumulation. You could see that this would be the quote-unquote distribution, right? But are we in a distribution model? Are we? Well, if you go down to this time frame and you draw your Gann box or whatever, and we are currently in AMD setup, right? This means that it's AMD, so manipulation down here. It's a bunch of shit. So then you have market open in the middle. Hence why I don't like to trade this, because it just disrupts everything. So when you look at the bigger picture, this isn't really distribution. This is also a form of manipulation, right? Because you're also taking out the highs of the accumulation, which is here, by the way. But you're also taking out liquidity from a higher time frame, and that's more probable, because this is cool and all, But this isn't reacting off any higher time frame PD arrays. This is just going down, accumulating, going up because of news. If there wasn't any news, we would have stayed in this area or gone, I don't know, but it's ultimately price can only react and make a big move off some kind of higher time frame PD array. So in real, this is the manipulation part. There's two of them basically. This is the one I see, and this is the one that others see, and now I see and I understand, right? Because of this higher time frame manipulation and sweep. And then what you really want to look at is the distribution, right? So we distribute down. But that's in this leg. That's in this New York session. And then what if you do afternoon session, right? Which is usually, and I mean usually you don't trade New York afternoon session because there's not a lot of volume. There really isn't a lot of volume at all. I mean, if you're a real trader, you know that everyone goes out to lunch, everyone goes and leaves their screens and doesn't trade. So the most active and volatile is when the market's open and everyone's at their desk. But when it comes to, I would say 12 to 1, there's not a lot of volume, not a lot of people trading, and then people come back around 1 or 2, and then everything goes up, everything goes down. But the thing I want to highlight is that you have accumulation, you have this manipulation. Let me draw the gone box here again. In the bigger time frame, this is the bigger time frame. This is bigger than what you see. Why is this off by like a mile? 12, 6. Yes. Why is this off like crazy? 12, 6, 12, 6. Why is my thing... What the fuck? Wait, am I tripping? Like, the thing's off by, like, a lot. What? Anyways. It works anyways, so it doesn't matter. Accumulation. This is the manipulation part. So inside the manipulation, you can draw another quarterly theory, like this. And you can take a trade off, whatever, right? Does that work? Yeah. Is that risky? Yeah. So when you look at the bigger picture, even like this makes sense, right? Accumulation, manipulation, both sides. Which one targets and takes out liquidity on higher time frame? This one up here. So which one's the real manipulation? This one. And if we have manipulation in a bearish order flow, what does that mean? That means that we're going to go down. Manipulation up, even though we took out the highs, took out these highs, took out higher time frame highs, we're going down to where? Previous lows, Asian lows, right? And then we don't worry about this. This is like this little piece right here. We don't care about this because all we did was target these lows. We didn't target any lower. We could have targeted a PD array, but I didn't have that order block. And this is like the last leg, and this is not what you want to be in. You want to take out your last positions at this low just to be safe and sound. And then look at this. At the end, we have like a smart money reversal. I guess we hit another time frame PD array, and then we do distribution, right? So this is all manipulation still, and there's manipulation up here, and then there's more manipulation down here, because guess what? This is also accumulation. This right here is also accumulation, right? This whole thing. That's Asian accumulation before London. You also have New York accumulation down here. So in reality, the second manipulation would be down here. So this is accumulation, and then our real manipulation is also down here too. Accumulation down here on Asia, a little bit on New York, and then manipulation down because we distribute all the way down, manipulated under these lows, swept those lows, and now we're distributing on the higher time frame quarterly theory, distributing. And so what do you look for now as a smart money trader, smart money reversal? You look for a market structure shift or a break of structure, mostly a market structure shift. So what do I want to see? I want to see a swing low, create a swing high, right? Or just a swing high that was created somewhere in this move, and that gets closed above. So usually I look at the 15-minute because that's a more rewarding time frame. You can kind of see everything. You can see the doji was created. That's a huge altercation there. I would look maybe at this high because that tells us a lot here. Also look at this high, right? So there's kind of two, but I would look at the higher high, see if we really want to go bullish. And the play here is not to get on this move. It's actually to get on the retracement. So market structure shift happens. What happens next? We get retracement, right? We get market structure shift. Then it hits some kind of PD array or it can keep going. But after a market structure shift, we have some kind of, displacement. And then off that displacement, we have some kind of fair value gap that is created. Okay. And then what I do? You have this move, and we know that price wants to reprice before rebalancing and taking out highs or whatever. So then your play will be on the 15-minute. You identify the market structure shift. So I'm going to say this one is our identified market structure shift or our breaker structure. Okay. So now I look for a fair value gap. But before I do that, I want to mark out my OTE because I know personally, if I believe in this system, I know that prices will go up. So my OTE system will help me figure out where price wants to go back up. And so if I just draw this, the OTE system tells me that price should hit in this golden zone. So then what I do on the 15-minute is I say, okay, well, here there's no fair value gaps. Is there any on the 30-minute? I doubt it. Because if there's nothing on the 15, there's nothing on the higher. Let me go on the 5-minute. Maybe there's something there on the 5-minute. There isn't. Nothing that I can see right now. So what's in the golden zone? Do we have any kind of fair value gaps, any kind of displacement that has been created? No, we don't have anything. Do I have anything here? No. Okay. What about the 3-minute? Is there any order blocks, any fair value gaps? Do I see something here? No, but that gets traded through. So we go up. Is there any kind of fair value gaps down here that gets created around this golden zone, in this golden zone? No. Last resort, 1 minute. This is the last resort. Like this is the very last thing. Is there anything here that could impact price? Let's see. No. Not really. Go back to the 3-minute because I do notice an order block. I want you to know. Yeah. So if we go on the 1-minute, there's no fair value gaps, but there is an order block, which is this. And you would just mark, I guess, the wick of that order block. You could even mark this whole wick because this is really the wick. And you can mark that. Now, it doesn't have to be super precise on the 1-minute, but then you look at price action. So you have your OT. And if there was a fair value gap here in this choppy zone, which unfortunately there isn't, I go back to the 5-minute. And you want to see this price action happen on the 1-minute too. In the 1-minute, 3-minute, and 5-minute. You should have all those charts up at the same time. You draw the OT. You can even draw, like, if you want, like, the range. You can draw, like, your fib. I just prefer OT. Optimal trade entry. Now, there's 3 points where price can target and reverse off. The first point is if we are looking to go higher, we need to go under this consequent encroachment of this range. This current bullish range, which is in bullish order flow, we need to see some kind of bearish momentum under this consequent encroachment. Because remember, we have this this thing called discount and premium. So let me draw it out again for you, right? Discount and premium, right? Consequent encroachment is right here. So this is the premium part and this is the discount. So we buy in discount and we sell in premium. Does that make sense? So anything in red in here, anything in this red zone, we want to buy. Okay, so this is technically the perfect time to buy if it's in the zone. Now, you might be thinking, okay, well, can't it sweep all 3 levels and then sweep this? Yeah, it could. That's where you wait. You wait and you find these fair value gaps. So let's say hypothetically, okay, theoretically, knowing there's no fair value gaps here, Imagine there was a fair value gap somewhere around here, for example. Somewhere there was a fair value gap right here, for example. I just believe it, okay? Believe that there was some kind of displacement that created that, which off this wick is probably is possible. That would be your target, because that, if there's nothing near this, you're looking for something near this golden zone, right? Because this is where price wants to go, this golden zone. If he wants to go lower, it's because there's some kind of displacement or some kind of PD array, either high time frame or just local PD array or internal PD array, that is making price want to reprice so much that it goes down all that. Like imagine there was imagine the only fair value gap was here and we didn't have this one, then price would want to come down here and sweep this low or this OT level, because there's a imbalance here that needs to be repriced or tapped into, right? That doesn't make sense. So then you look at the 5 minutes, you're like, okay, well, this doesn't tell us much, because when you're live and you see this candle, yeah, it's rebalancing price, but is it really? Because you don't really know that until the candle closes. You look at the 3 minute, it's a little more reassuring. All these candles have closed, this candle has traded into the OT and then out of trading and closing above. Everything's above on the 3 minute. That tells you something. Okay. And if you were to take a trade, right, it would be for me, it would be kind of random. Like I would just enter off a bullish something. I would, even on the 5 minute here, like what could be the price you would enter off. Could look for another fair value gap. Unfortunately, there's not a lot here that you can really play off of. Not a lot. Yeah, not a lot. What I would have done is, if I notice on the 3 minute, for example, oh, there's a fair value gap here that was created on the 1 minute. Okay. Displacement up. And then we kind of get that break of structure. Actually, we don't even get it here. Displacement down, minute here. And then right on the 3 minute, you'd be, oh, shit. That just fell on the floor. Then you can enter off there. Kind of have to refine that strategy because I haven't done optimal entry in a while. Those things though, that doesn't require strategy. Like sometimes I can just look at price and know that it wants to go up or it wants to go down, right? Sometimes I can do that. Sometimes at 9:30 I have no clue where it wants to go. But here it's in clear distribution, right? It's in clear distribution. It's already tapped into this high time frame PD array that we've already liquidated. So in a way, it tells us, price literally tells us that at this time, look at where we switch the quarters. There's manipulation happening. Then we go up, and I mean we go up to where? The zone that we've already swept. So that means that this zone is practically invisible. That means we can go right through it. Does that make sense? We can go right through it. We're going to go right through it. But where? Where's the liquidity that we want? The liquidity is right here. That's where we're targeting. So in a way, you can take a trade right here. No, why is it switched? Take a trade knowing that it's going to target here, and your stop loss should be like right here, basically. That's the trade I would have taken. And that's the beauty of trading, because I understand the price action, the retracement leg, then the reaccumulation, redistribution, all in the quarterly theory distribution scheme right here. This is all in distribution. This all reaccumulation tapped into the high time frame PD array. This is all happening in the distribution. And then guess what happens? Then you put your stop loss or your take profit here because it's reaching. You're not reaching for those highs. You don't care about this, right? Maybe there's highs here, but all you care about is to get out because there's liquidity here that has been engineeredly created. You don't care about what's up here. Maybe it wants to go even higher. No, that's your trade. You're out, right? And nice 6 to 1 to 6 risk to reward ratio. Done for the day, right? And then blue area continuation. As you can see, what happens when we hit the blue area? It's done. It's stopped trading. Like we're done. Well, yeah, because it hit 4 already. But oh yeah. Look, I mean, just look at this, right? Because we close at 4. So the trade is this basically. So you would have, theoretically, it would have been a little risky because that's the only part. It would have been a little risky because the trade literally ends, like the market stops at 4. But if you left it for like a 2-day contract, then it would have hit. The only thing is I don't know if the take profit would have been triggered in time. So that's the only concern I would have. But maybe you're more conservative and what the fuck? Conservative, and your only take profit was here, right? Or maybe if you want to be even more gentle, your take profit was here. All those would have hit. That's all engineered liquidity that was meant to be taken profit of. So I have to go eat, but this is what I'm going to leave you with. Lots of information, lots of talking, and I will see you tomorrow, I guess.